Tesla, some absolutely epic, massive news out of Tesla here today in regards to what Elon Musk and the executive team, a decision they just made that has absolutely insane ramifications kind of moving forward, okay? And I will say this, it is time to panic. And I'm not talking to Tesla shareholders, but other folks, they need to start panicking because what's about to happen, okay? And I'm going to take you through all that. Now, today's video is not just going to be around Tesla. That's what we're going to talk about here for the first few moments of the video because that's obviously what's on everybody's mind, right? But I want to talk about also bank earnings later on in this video, kind of what those CEOs said, which I think is very important if you want to understand how the economy is doing, the guidance that companies might give and things like that. Pay attention to what the bank CEOs have to say, what their numbers are, they just report it, and those sorts of things. So a lot to share with you guys, and also some weird moves on a few stocks I want to show you that's like, does somebody know something? What's going on here? Okay, so I'll discuss that in this video. As always, I appreciate every single person that is subscribed to the channel. Thank you for being here. And just a couple hours ago, I posted the new buys in the Patreon portfolio. The second time ever, I bought one growth stock, one value stock, and two dividend stocks, and I did buy one hedge in that portfolio here today. If you want to support the channel and you also want access to see all the buys and sells in that particular portfolio, check out the pinned comment down there. Thank you everybody that's over there on Patreon. I appreciate y'all, and thank you for supporting the channel. And yeah, I hope you enjoy that. And the account's off to a very good start. I hope it's off to a much better start over the next few months and many years. Okay, so massive epic news out of Tesla. This is insane. Okay, Tesla just dropped prices in a epic way. Tesla just announced massive price cuts in the United States across the board. Model Y long range is now $13,000 cheaper before the tax credit and $20,500 cheaper, including the tax credit. Look at this, okay? So now if you want a standard range rear wheel drive Model 3, okay? You're looking at, after the tax credit, at only $36,400 now at this point in time. If you want a performance edition Model 3 after the tax credit, now you're only looking at $46,000. A Model Y, $45,000 for a freaking Model Y. Are you kidding me? Are you kidding me? Do you know the type of volumes Tesla's going to put up over the next few years if they have a $45,000 after tax credit? Oh my gosh, okay, that's ridiculous. For a vehicle of that caliber, under 50K, like, it's hard to even fathom that. It's hard to even fathom that, okay? And I've driven in Model Y several times in the past. Obviously, I have a Model X and I have a Model S Plaid, right? But I've driven in Model Y several times, including on my vacation. There's no SUV on the market under $50,000 that even can hold a candle to Model Y. It's not even close, man. There's Model Y and there's everything else. That's under 50 now is insane. A performance edition Model Y, right? Which is 0 to 60 in like 3 seconds or something insane, 3.2 seconds, something like that, right? Which could be, I mean, most supercars, like, it's insane, right? That baby now is $57,000. After the tax credit. That's unreal, okay? Absolutely unreal. Now, remember what I told you guys at the start of this video. Some folks need to start to panic, and it's not Tesla shareholders, okay? The big boys, you better start panicking now, okay? Because with Tesla, Elon Musk and the executive team over there at Tesla, they said, forget about margins. We don't care. We're about volumes. And to try to compete with a $36,000 Model 3 and try to compete with a $45,000 Model Y SUV, good luck. Good luck, big boys, okay? You guys are in some big trouble now at this point in time. And Tesla doesn't give a crap about margins. Now, we all know Tesla's always trying to figure out ways to save costs. And I'm sure they're going to recoup some of that in cost savings, right? But I don't think they're going to recoup all that. Tesla's margins will be hit. But Elon and the team says, we don't care. We are taking market share. And that spells trouble for all these guys that they already have problems. All these big auto manufacturers, they're already in a world of hurt, man. They're on the ropes, and they're going against the best businessman in the world, in Elon Musk, right? You know, if we're going to just keep up stats, like, you know, who's got the biggest numbers? That's Elon Musk, right? And so these guys are going against the best businessman in the world, who is putting his foot on their throat right now. He's putting his foot on their throat, and he's like, have fun trying to compete with us now at this point in time, right? That is insane. Elon and the team is clear as day. They are all about volumes and market share. And boy, are they going to steal some market share. They're already stealing so much market share, but it's just the start of it. Oh, it's going to be a nasty next few years for these guys to try to compete with Tesla. Good freaking luck, because they're going to need all the luck in the world. Now, I was thinking, maybe mainstream media is going to be covering all this price drops and all that stuff. No, what they would rather basically talk about, mainstream media, look at this, a road rage incident where supposedly a Tesla driver has a pipe and he's going crazy on a California freeway, all mad, right? And isn't that interesting? I wouldn't be surprised if it comes out and we find that this guy's a paid actor or something like that over time. Like that's just what you should expect from mainstream media. They don't want to cover that Tesla obviously just dropped price in an epic way, right? They'd much rather cover an incident like that, which who knows about that, right? Because at the end of the day, they don't make any money off Tesla. Tesla doesn't advertise on those platforms. They're not going to make any money. But you know who does? Ford and GM and Volkswagen and Nissan and Honda and all those guys. They pay those companies millions, tens of millions, sometimes hundreds of millions of dollars to advertise on their massive networks, right? And so those networks want to do kind of usually everything to try to bring down Tesla because they don't get any money from Tesla, right? So why would they try to support Tesla in any way? They would much rather plant negative articles, negative whatever, right? And there's a million road rage incidents a day. A million. Like, are you kidding me? Like, shoot, man, drive around for a little bit and you'd be lucky to not get a gun pulled on you at some point in time, a given day on the road, right? And yet it happens with the Tesla driver, supposedly. And if it is an actual Tesla driver, right? Maybe it was rented on Turo, a paid actor. You never know, right? But, and that's what they cover. Isn't that funny? No different than every time Tesla gets in a crash. Like, all of a sudden, everybody wants to cover Tesla got in a crash. Oh, my gosh. A million people get in crashes every day. But yet Tesla gets in a crash and makes the news. Isn't it funny how it works, man? Isn't it funny? I think there's a word for that, right? I think there's a word for that when you're shaking down a company for money, and it's like, hey, support us. It's just, that's the way it works, man. That's the way the world works, but it is what it is, okay? So that covers Tesla. Man, they're all about market share, and they are going to steal a whole lot of market share over these next few years, okay? Next up, I want to talk about banking. So banking stocks, what a boring day for banking stocks, considering almost, all the big banks reported today earnings. Such a sleepy day. The best performing stock of the bunch was JP Morgan at a 2% gainer. That is a stock I personally own in my dividends only account, which is available in my private stock group. If you want to apply to join us in the private stock group, the private wealth group, that will be linked in the description down there. But JP Morgan's the biggest mover at a 2% move. So what did the CEOs of these companies have to say? And what were the numbers these companies reported? Are we falling off a cliff as far as the economy goes, as far as these bank earnings go, and all sorts of things? Let's take a little look, okay? So first thing is, in regards to the whole recession talk, right? We got a consensus from the big banks, okay? Bank of America expects mild recession. JP Morgan, Jamie Dimon, mild recession is a central case. So basically, these big bank CEOs and executives are now expecting a mild recession over this next year, okay? So it is something to just keep in mind there, that's become the expectation over this next year. Now, one side of that could be bad. It could be like, oh man, I don't want to see a recession or something like that. The other side of that is, I think it's healthy. At the end of the day, you don't want to go into a recession where no one was expecting that recession. Everybody's caught off guard. I would much rather go in with all the big bank CEOs in general, be like, hey, I think we're going to have a recession, than a situation where everybody's caught off guard. Because when you get caught off guard, that's when things get really bad really quickly, when no one's expecting it. If everybody's expecting it, right? It reminds me of, I went on a zip line, a bunch of zip lines when I was in Mexico this past week, okay? In my first time, and these were like these epic, huge zip lines in Mexico, okay? Insane. And the first time I went on the zip line, I didn't really know what to expect. And I'm holding it, and you stop super fast. You're going super fast, and then you stop super fast, essentially, and you hit this thing. And the first time I wasn't really prepared for it, and I kind of hit my nose, and dang, I thought I might have gave myself a bloody nose. I didn't. But that was a boom, right? Because I wasn't expecting it. And then for the rest of the zip lines, I was fine because I knew what to expect. So I held my arms really firmly, and it was fine, right? And so they're no different than a recession scenario. you're going to hit yourself in the nose really dang hard if you weren't expecting it. And that happened in the great financial crisis because a lot of folks weren't expecting a major recession. And then it kind of came out of nowhere and caused huge shock to the system. And next thing you know, you had banks failing all over the place. You had investment banks failing all over the place. You had funds failing all over the place. It was a mess, and we almost lost the entire financial system, right? Which was a very scary time because no one was expecting it. It came kind of out of nowhere, right? The housing market all of a sudden came collapsing down, which no one ever expected. Like the housing market, you never thought could drop like it dropped, and it dropped off a cliff. No one was expecting that. So I would much rather go in with a lot of CEOs and a lot of people expecting recession than not recession. That's the bottom line with that. You're prepared for it. It's a much better scenario than you're not prepared for it. To go a little bit deeper here, okay? Bank of America CEO Brian Moynihan said Friday that the bank is preparing for potential recession in 2023, including a scenario where unemployment rises rapidly. So they're taking things very serious if they're considering a situation where unemployment rises rapidly. Our baseline scenario contemplates a mild recession, but we also add to that a downside scenario. And what this results in is 95% of our reserve methodology is weighted toward recessionary environment in 2023, says Moynihan. That pessimistic call, which is more negative than it was last quarter, calls for unemployment to rise to 5.5% early this year and remain at 5% or above through the end of 2024, says Moynihan. So I think there's two factors. One is they're expecting unemployment to go up quite a bit over the next, let's call it, few quarters. The second component of that is, right, and expecting that to stay at 5% plus through the end of 2024. The second component of that I think is very important is they're not necessarily talking about 7, 8, 9, 10% unemployment, which those are the sort of numbers we saw in the great financial crisis. If you look back at what unemployment went to in the great financial crisis, it went all of a sudden to 4s, 5s, 6s, 7s, 8s, 9s, and right around 10 at the peak, essentially. And so I think that's an important factor for everybody to think about, right, is the CEOs aren't necessarily prepped for that sort of scenario. And that's the scary part there, okay? You're hearing them talk about 5s or 6s or something like that, but not really talking about 7, 8s, and 9s, right, which is obviously a severe, epic recession if that were to play out, right? No, in regards to stocks I own, there's definitely a weird move, okay? I think you guys see the weird move on here. It is Foot Locker stock. No, I'm just kidding, okay? The weird move's obviously the chef here today. Abnormal move is up double-digit percentage, but something very strange is going on with that stock because look at the volume here today. This is only about halfway through the trading day when I took this screenshot. 2.3 million shares traded on an average volume of 1.3 million. Extremely strange. Whatever's going on there, I don't know. Maybe somebody knows something, or maybe somebody's just taking a huge kind of gamble on some sort of short-term trade here around the chef. But when I see a weird move like that is so abnormal and such a huge volume amount, it does lead me to think like maybe somebody knows something. I don't know, okay? We'll see. We'll see. But if some news comes out over the next, few days or few weeks, like just remember what happened here because that is not normal whatsoever in regards to that whole situation there, okay? No. And by the way, was I buying Chef today? Absolutely not. I haven't bought it for a while. I still hold all my shares, obviously, but I obviously wasn't buying any shares today. But somebody was buying a lot. Commodities, not good news. A lot of green out there when it comes to commodities. And the reason this is so important that commodities go down is one of the reasons we start to see inflation ease is commodities have really started to tank over the last 6 to 9 months. And we need this to kind of continue on. A lot of these commodities are still actually elevated from where they are traditionally are, right? And if you look here, we definitely have a problem. This is just in the past 5 days. Commodities index in general is up about 3.6%. We can't have this. If we want to continue to see these inflation numbers go down and down and down, and especially if we want to dream about getting down to that 2% number for, what the Fed wants us to get down to 2%-ish CPI, we need commodities to continue to be in a tough place and continue to get worse. And so this is not activity we want to see out there right now, okay? And it's not activity the Fed wants to see, anybody wants to see right now, okay? No. I think there's some stocks in some pure delusion right now. I look at a stock like Toll Brothers, a home builder, in pure delusion right now. This stock's only down about 17%, 16% over the past year. And it's actually come back strong recently from the lows of $40 or so to 55, 56 bucks. This is a stock that I feel like it's in pure delusion. I'm not playing it on a put option play or anything like that. But I got to say it's in pure delusion, because the way I think about this is real estate's, in terms of Toll Brother numbers, they're going to start to tank in the back half of this year. I'm talking revenues. Orders are already starting to tank for the company. It's going to get worse before it gets better. Revenue is going to really start to tank. Amount of homes delivered is going to start to tank in the back half of this year in 2023, right? And EPS is going to tank in the back half of this year as well, right? So all that's going to happen. And I don't see it getting better actually in 2024 either. I wouldn't be surprised at all if 2024 revenues, EPS, everything, homes delivered tanks even more in 2024. So I don't think this is a situation that gets better anytime soon for Toll Brothers. I don't think Toll Brothers revenues and earnings per share improve until probably 2025 or 2026. And so that's a stock I look at and I'm like, that's in pure delusion. And I always feel like the real estate market is much easier to forecast and predict than the stock market. Stock market is crazy to try to predict on a year-by-year basis. I feel like real estate's, I don't want to say easy, but it's much more on the easy side compared to the stock market. And so that's what I'm expecting with this company like Toll Brothers, and it just feels like it's in a state of delusion in current terms of its stock price. And we know the next couple quarters are still going to be good for the company just because they have this backlog that's going to be filled here. But nonetheless, don't be surprised if their numbers start to tank in an epic way in the back half of 23 and get far worse in 2024 as well. So that's one of the stocks I wouldn't mind buying Toll Brothers at some point in time, but not yet. Not even close. Any of these home builder related companies, anything home related, no. It's not even the time to think about these stocks as of right now. It's way, no, okay. You look at a stock like Home Depot, I feel it's in that category as well as in terms of pure delusion. Stock's only down 15% in the past year. I think their numbers are going to get considerably worse as 2023 goes along, and probably even worse in 2024. That's a whole segment that I just want no piece of. No piece of. Right now it's in delusion, but I think reality will eventually hit these stocks. It's just a question of does reality hit a month from now, 3 months from now, or 6 months from now? Okay. Now, with that being said, 2023 in general, right? Because I think a lot of folks are looking at stocks, right? And let's say Tesla, Amazon, whatever the stock is, okay? And they're trying to get real perfect around pricing for a lot of those companies. And the best thing I could say is that's not really the strategy for 2023. The bottom line is when it comes to a lot of these stocks, they're extremely discounted. And as long as you have more income than expenses, you're always ready to take advantage of these deals, right? So you don't have to time it out perfectly. And in regards to some of these stocks, if you have to perfectly time out the bottom in them, first off, that's a loser's game. No one wins at that game. The second thing is, if you have to try to time perfectly the bottom in these stocks, they're probably not the right stocks for you, right? If it's a big difference between buying Tesla at, let's say, 105 versus 115 versus 110, it shouldn't make a difference in the end. It should not make a difference in the end. If Tesla's really that explosive growth company we think it is, right? And we think it's going back to $1 trillion plus market cap a few years from now, right? Does it matter if you bought at 105 or 110 or 115? It doesn't. And so you have to take advantage of those deals and just understand you're not going to get the perfect bottom on these stocks. And some of these stocks might have already hit their bottoms, and they might not see that bottom again even if the market gets rough. I look at a stock like Meta. I think it's a very low probability Meta ever gets back to the 80s again. I don't think that's happening. I think that stock's already bottomed regardless. The S&P 500 go down 20%, and I don't think Meta's going back to the 80s. It's a possibility, but I call it a very unrealistic possibility. That stock gets back down the 80s now at this point in time. You look at a stock like Netflix and the lows that hit back in the summertime of 2022, right? And so many of these stocks are going to bottom at different time periods, and to try to pick the bottom in these stocks is a game that's not a winning game, okay? At the end of the day, when you see these stocks, especially a lot of these great growth companies that have beautiful business models for the next 5-10 years, trading at these insane discounts, you've got to take advantage. And as long as you have more income than expenses, you're able to continue to take advantage of that over the coming weeks and the coming months, if you're presented with any better buying entries. But the bottom line is you're getting a tremendous buying entries on a whole host of stocks now at this point in time. There was a time period when you had to be perfect around buying, right? And it was very dangerous times to be a buyer. That was late 2020. That was early 2021. That's not today. 2023 is a whole different animal. Now you're getting a feast. You're getting a platter. This is a buffet of stocks out there now at this point in time. And if you're having to be perfect around the exact price you buy at, you're not in the right stocks in this market. I can tell you that, because there's way too many great deals out there now at this point in time. Okay, folks? So anyways, hope you enjoyed today's video. As always, I appreciate everybody for joining me. Thank you. I hope you enjoyed today's video. And thanks for being subscribed as well. If you're looking to access the Patreon, and check that out and see the stocks I bought here today, as well as all future Fridays as well. I'm going to buy in that account every single Friday. So if you want to have access to that, there will be pinned comment down there. Thank you, everybody that supports the channel on Patreon. Appreciate y'all. Much love as always, and have a great day.